Have you ever wondered how the wealthiest people on the planet manage their fortune? How do they strategically allocate their wealth to ensure its growth and sustainability? Today, we delve into the world of wealth management. Picture this, a high-achieving entrepreneur, let's call him John. John is the founder of a successful tech startup. His company has just gone public and he finds himself in possession of a substantial amount of wealth. Now, John is not just tech-savvy, he's smart about his money too. He realizes that wealth management is a necessity, not an option. But why? Wealth management is not just about maintaining a fortune, it's about growing it. It's about making one's wealth work for them. John understands this principle. He knows that sitting on his money will not get him anywhere. Therefore, he decides to invest. He invests in stocks, bonds, and real estate, spreading his wealth across various asset classes. This is the first principle of wealth management: diversification. John knows that putting all his eggs in one basket is risky. He understands that diversification reduces risk and allows for more consistent returns. But he doesn't just invest blindly. He does his research, consults with financial advisors, and carefully considers his options. This leads us to the second principle of wealth management: comprehensive financial planning. John realizes that wealth management is not a one-time event. It's a continuous process that requires careful planning and regular review. He sets clear financial goals, creates a comprehensive plan to achieve them, and regularly reviews his progress. But what about taxes? John knows that taxes can significantly reduce his wealth if not managed properly. So, he seeks advice from tax professionals and employs strategies to minimize his tax liability. This is the third principle of wealth management: tax planning. John also understands that his wealth should not just benefit him, but also his loved ones. He wants to ensure that his wealth is passed on to his heirs in the most efficient way possible. So, he employs estate planning strategies, which is the fourth principle of wealth management. Now, John's journey is not a fairy tale. It's a reality for many wealthy individuals. His wealth management strategies are not unique, but are the pillars that many wealthy individuals and families rely on. In summary, wealth management is a strategic process that involves diversification, comprehensive financial planning, tax planning, and estate planning. It's about making your wealth work for you, growing it, and passing it on to future generations. And remember, it's not just for the ultra-rich. Anyone looking to manage their wealth effectively can employ these principles. So the next time you find yourself pondering over the question, how do the wealthiest manage their wealth? Remember John's story. Remember the principles he employed. And most importantly, remember that wealth management is not a luxury, but a necessity.